Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Cardano and its native token, ADA, and we're going to be discussing the Heikin-Ashi candles. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and stake your ADA with the Into the Cryptoverse stake pools. Let's go ahead and jump in. So one of the things I've mentioned many times, and this is said many times throughout the bull market, and I've reiterated it throughout the bear market as well, is that you really don't want to marry an altcoin in a bear market. And the reason for that, it's nothing personal. It's just that altcoins tend to act as falling knives in a bear market. And it's always very difficult to know exactly when the bottom is going to occur. Obviously, many people will spend the entire bear market calling for the bottom, as many have in 2022. But one of the things I wanted to talk about are these Heikin-Ashi candles. We actually did a video on it for Bitcoin and Ethereum. So if you didn't check those out, make sure you check that out. This is the last video I'm going to do on the Heikin-Ashi candles for a while. I mean, it's an interesting tool, and I think everyone should be aware of it. But hopefully you can use it to look at all the different altcoins that you might be interested in. But one of the ways that they're useful is if you just look at the bear market as it is right now, sometimes you'll get these bear market rallies that have a way of sort of getting everyone excited again. And a lot of people might then YOLO back into the market because they think the bottom is in. Unfortunately, bear markets have a way of sort of sucking back in as much money as they possibly can before continuing downward. So you have to be careful about them. And one way to sort of get rid of this is to, over here on TradingView, you can actually switch this over to the Heikin-Ashi candles. And what you'll notice is that it's just a fairly systematic bear market, a slow bleed. That's all it's been basically since late 2021. And essentially what you see are candles, red candles, large candle bodies, undershadows, but really no or few overshadows. If you're not familiar with the Heikin-Ashi candles, we talked about it a little bit over here, where the close is equal to 1/4 of the high plus the low plus the open plus the close, and the open is equal to 1/2 of the open of the previous bar and the close of the previous bar. So you're just taking the average. Now that way it's actually dependent on a candle that preceded it, which is unlike the normal candles that we look at in terms of where the open is. Normally the open is just where the close was, not an average of the prior open and close. But again, the high is the max of the high, the open and close, and the low is the min of the low, open and close. And remember, the reason why the max isn't just the high is because the open is a function of the prior candle, which could be higher than the high of the current candle. So remember that. So when you look at it like this and you sort of drown out some of the noise, you get Cardano monthly Heikin-Ashi candles that simply show a fairly systematic bear market, right? Where it's just a bear market. And there's really no reason to, overcomplicate it. It is what it is. And it's nothing necessarily fundamental about any specific project, but in a bear market, you generally expect that a lot of these projects will in fact bleed. And I have videos on my channel, back from 2019 where we talked about how it was likely going to go through a nice bull run. And then it went up 150x. But if it can go up 150x, you sure as hell should expect it to be able to give a lot of those gains back in a bear market. Now, one thing here, if you look, these are just large candle bodies, lower shadows, no or few upper shadows. Whereas the bull market was characterized somewhat differently, right? I mean, there was this sort of fake out in here, just like Bitcoin had, but it's mostly characterized by large candle bodies, upper shadows, and no under shadows. And one of the reasons why I think it's useful to look at these charts is because if this is any indication of what happened in 2019, remember, just because you see a shift in it at some point doesn't mean the bull market's back on, right? It could just be some reprieve for a while before you go retest it, or in this case, in Ada's case, it actually ended up putting in a lower low. One thing that I also want to visualize here for a minute is if we actually go over to the Ada bear market. So that's what we're going to do really quick. And really, that in 2018, the bear market for Ada ended in December. However, it did technically put in a lower low in March of 2020. And so I think it's probably safe to say that the bear market ended here right, back in December, and that this was sort of just an accumulation phase with technically a lower low. So you had like a low and then a lower low, and that was sort of the end of the bear market. You could argue the bear market ended over here, but technically speaking, if you were to just say the bear market lasted until the last low was in, and of course, being technically correct is in fact the best way to be correct. If you were to say that and look at the bear market for ADA during the last cycle, it would have looked something like this. So this is what it looked like. The blue line. This is the ADA bear market from 2018 to early 2020. Currently, this is what the ADA bear market looks like, right? The drawdown has not been as bad so far, but if it were following the 2018 bear market, it would have bottomed months ago from when its bear market actually started and began a brief uptrend into a later lower low. When in fact, this time has not shown that pattern. Instead, it's just been a fairly slow and systematic bleed. I think a lot of people would love for just some type of major capitulation in a single day or over a week where a lot of volume comes in and we get some major bounce off of it like we did in 2018. But so far, it's just been a slow and systematic bleed. We have to remember, this is the first cycle where we really saw a double peak cycle with Bitcoin, and ADA sort of had something similar where it went just a bit higher in later 2021 than it did in early 2021. And so we should be somewhat open-minded as to how the bottoming process could in fact play out. If ADA were to continue this bleed for just a few more months, where we would essentially be following the same we would be looking at the same ROI from peak as the last bear market. I'm not saying that has to occur, but we're just looking at the current bear market with respect to the last bear market, and you can see that sort of on track, and it's not that far away from actually being right on top of it. I would suspect that the ultimate bottom in terms of the percent drawdown from the all-time high is likely not going to be as low as it was last cycle, but it doesn't mean that it can't continue to bleed. And again, if you look at the monthly Heikin-Ashi candles, it shows you a fairly compelling story of how trying to catch knives in a bear market is typically not a good thing. Now, again, as always, there are always a few altcoins that outperform. I'm not trying to take anything away from them. It's hard to know always which those altcoins are going to be, and just because they performed well so far doesn't mean they're going to perform well over the next 6 months either. But again, if you look at say this on the weekly time frame, you can see the counter trend rallies, right? You see the bear market rallies. And oftentimes these are the bear market rallies where a lot of people might question their sort of bear market thesis and say, well, what if it's not a bear market? Or what if the bear market's over? And literally every single time we just continue to eventually push down to new lows, okay? Now, let's suppose you carried out a strategy in 2018, and your strategy could have just simply been, and again, this is not necessarily my strategy, but let's suppose, just for the sake of it, you carried out a strategy where, once you get these first monthly closes, you admit the bear market is in full effect. Once you get these red monthly Heikin-Ashi candles and you get confirmation of it, if you had just simply waited until this turned green, I mean, yes, it would have been buying ADA at 5 cents, which was well off the low, about 100% off the low. The counterpoint to someone who maybe would have taken this strategy, who they just, if they just bought at 5 cents and they didn't buy until they saw some type of move back up to the upside where it wasn't just a falling knife anymore, they might say, well, yeah, I bought it at 5 cents, which is 100% off the low, but it sure as hell beat buying it at 10 cents and at 15 cents on the way down, and at 25 cents on the way down, and at 50 cents on the way down, right? Even from these levels, right, even after you had sort of a monthly candle here that was red, ADA still went down another 87 or 88%. And this is one of those things where in a bear market, when you realize the bear market is in full effect, as we talked about at the beginning of this year, you probably heard me say things like if you're considering buying an altcoin in 2022, you should just take a cold shower and reconsider. And I got a lot of pushback on that because generally speaking, the whole idea in a bull market is you buy the dip, right? I mean, this is the idea in the bull market is any type of dip that forms is generally a fairly good opportunity to buy. The hard part is when you recognize that the party's over and that the trend is shifting, buying the dip doesn't work out that well, okay? And that's how you lose all your money. And I've said many times, the way you get rich in a bull market is by, you know, DCing into the market during the accumulation phase and not YOLOing into every single counter trend rally along the way, right? That's generally the point that I've tried making, time and time again during this bear market, and that you should look at these things and say, you know what, it's just been a slow bleeder so far. Doesn't mean it can't turn around at some point, but it still simply remains a falling knife. If you were to look at this on 3-month Heikin-Ashi candles, look at this trend. Okay, look at this trend. I mean, yes, even in this trend where it stayed red the entire way, there was still like a 4x in there to be made. If you bought it at 2.5 cents, then you saw it rally to 10 cents. But in the grand scheme of things, that still was all part of the accumulation phase. And you can see that there was, you can see there was actually 8, because it's one more than what it shows. There was 8 3-month candles in a row that were red in terms of Heikin-Ashi candles. And so far, ADA is in its 4th one. Meaning if it's going to follow what it did back over here, you could still see these going all the way out until early 2024 or late 2023 before it really turns back around. Now, that's not to say it's going to take that long necessarily until it bottoms, but again, these things take a long time. And what you may notice is that these candles here, the 3-month Heikin-Ashi candles for ADA back in 2018, large candle bodies, no upper shadows, just lower shadows. We had one that showed an upper shadow briefly, and that was sort of that 4x rally that took us back up to 10 cents, but still it ultimately continued to bleed down. And it wasn't until the 3-month Heikin-Ashi turned green that you could argue that ADA was back in business, right? So again, this is just a way to sort of look at the longer term running trends in the market and not get so focused on what is it doing on a daily basis or a weekly basis. And in the same way, I mean, if ADA were to experience another counter trend rally back up, it might cause people to, once again want to come in with size or something. But, and it's not to say that it can't be the bottom. It's just to say, it's a very risky trade to make, especially when so far you can just see the results of this trade, right? I mean, it's just been a continued bear market, slow bleed, trying to catch the falling knife. And as much as you might want these altcoins to do well, this is just the nature of it, right? It's just a slow and systematic bleed. I mean, it's not just ADA. I mean, go take a look at Polkadot. A very similar type of thing, right? Just a systematic downtrend. Look at Solana, systematic downtrend. Look at Avalanche, right? I mean, it's just a lot of these altcoins are on the same path. Link showing a little bit of strength recently, right? Relatively speaking. You guys know I talk about Link sometimes, and I'm not all about the if you hold this altcoin, you can't talk about that one. Look, guys, I mean, at the end of the day, I think crypto would be better off without this, this sort of mentality of like if you don't own it, then you consider it to be like a scam or something, right? But if you sort of take your stroll around the Cryptoverse, you can see that most altcoins are just in slow, systematic bleeds on their US dollar pairs, right? On their USD pairs. It doesn't mean they won't eventually turn around, but I would put forth the idea that, buying altcoins in a bear market is incredibly risky. And if you're a skilled short-term trader, then maybe you're good at trading these counter trend rallies, these bear market rallies. But that is not, what I focus on. And I'm just sort of looking at these longer term trends. And you have to admit it, right? I mean, when you see these monthly candles, so far, it's just been nothing than a slow bleed. And, I know a lot of people are sort of hoping that the summer was the bottom. And yeah, once again, that has proved to be not true, right? As sort of a lot of the indicators suspected would be the case. So, we'll continue to follow it. Again, I'm not going to keep talking about the Heikin-Ashi candles, but I just wanted to put out a few videos on it. Bitcoin, Ethereum. Now we talked about an altcoin. We'll see eventually where they turn back around. So far, it hasn't happened. And so far, we're not even seeing upper shadows. And the last time ADA saw an upper shadow, here's a tiny one right here, back in August of 2022. But really, the first real one, the last real one that we saw was all the way back in April of 2022, right? So it's been a long time since ADA has showed any type of relative strength. And so far, it remains in a very systematic downtrend. I know it's not always what you want to hear, but we have to be honest with ourselves and not make it out to be something that it's not. So again, if you guys like the content, make sure you subscribe, give the video a thumbs up. And again, you can stake your ADA with the ITC stake pools if you want to earn rewards. Thank you guys for tuning in, subscribe, and I'll see you next time. Bye.